Welcome to Lana Pinteno's Screencast assignment on internal controls. But do you really know much about internal controls, or do you feel like this confused stock image? Well, fear no more, as definitions are here. Internal controls are a system of policies and procedures that a business puts in place to provide assurance that the company's operations are efficient and effective, financial reporting is reliable and is complying with applicable laws and regulations. Basically, it's the difference to everything running smoothly, like this sweet German tune. And this. All is good though, as there are 5 key components to internal controls to making sure your business's groove is never interrupted. Control environment is the atmosphere in which the members of an organisation conduct their activities and carry out their responsibilities. People usually mimic their surroundings, so people working in an environment that's honest, moral and effective are usually honest, moral and effective. But of course, it works the other way too. Next, there's risk assessment, which is the identification and analysis of the risks that threaten the achievement of organisational objectives. So it's the assessing of risk, which is pretty obvious. In case you needed more information though, once an organisation identifies risk, it should then estimate its significance, assess the likelihood of it occurring, and consider what actions can be taken to manage it. So, assess the risk, which is really obvious. Then there are your control activities, which are policies and procedures established by management to address risks that stop an organisation from achieving objectives. These activities will usually fall into one of these categories. Segregating duties, so everyone has their own task. Physical security will safeguard assets or records. Independent verification, so information is reviewed and reconciled within the organisation. Establishing responsibility by having accountability for tasks and maintaining adequate documentation, which promotes error-free accounting records. Information and communication refers to the need for the open flow of relevant information throughout an organisation. A good flow will mean that information is captured and communicated in a way that lets employees do what they need to do. Monitoring refers to the assessment of the quality of an organisation's internal control. This can be done in 2 ways, through ongoing activities, things that are checked regularly, or by asking employees if they understand the controls and if they're actually doing them. Although beware, things can go wrong. Unfortunately, the human element means things can never be perfect, and the cost-benefit analysis means controls can be neglected. Hear that? That's the sound of your great internally controlled organisation.